Hi, welcome to this podcast where I'm going to look at auditors and what goes into the auditor's report. Okay, role of the auditors, they're supposed to act independently or objectively. So what they're not meant to do is look at a company with bias. I've put the independence in italics there because when we look at some of the problems with auditors, this is something that's regularly being questioned, particularly when there's been company failures or there's been large discrepancies unearthed in a company's accounts in the future. Okay, an auditor must be qualified, and to be qualified, you need to be a chartered accountant, and it's not a chartered management accountant to actually sign off an auditor's report. It's got to be with something like ACCA or ACA in the UK. What they're supposed to do is scrutinise, check the reports are prepared properly, and also check that accounting records are being recorded properly. And one of the key terms you will see with auditors is a term true and fair. I'll do just a little bit more on true and fair later. I'll come back to it later. But the true part means events recorded have happened and are treated in accordance with international accounting standards, current legal regulations in the country, and common practice. So, for example, are we using the debit and credit system properly? Is all the information being captured in the debit and credit system? And are the right T accounts being grouped together, for example, in sales properly? Or things like, are depreciation policies being applied properly? And also, the fair bit means that the information presented is faithfully. Faithfully means in accordance with the true information that the company are gathering and presented without bias. And that means fundamentally not putting too much of a positive spin on the results. If results have got worse, do the company's accounts reflect that? And they're not just looking at the actual financial information. Part of the auditor's job is to check that the director's report and the strategic report are giving a view of the future which is consistent with the information from the present. So, for example, if a company was predicting a doubling in sales and they've been experiencing 3% growth for the last 20 years, that probably wouldn't be a faithful representation of what the company is anticipating in the future. They're supposed to comment on corporate governance, and I will do a separate video on corporate governance. And then on there, they will specifically comment about whether the leadership and the roles for the leadership are clearly defined. So, for example, do we know what the executive directors and the non-executive directors of a business are supposed to do? The effectiveness of the board in particular, and do they consider the board members to have the necessary skills to actually undertake those roles? Remunerations, so are senior staff salaries appropriate for the business, or are they paying themselves too much, or possibly even not enough if it's a large business and they need to attract the right quality of person onto a board? And how effectively the board and the company manage their relations with the shareholders. Are they communicating the right information? Are they communicating it accurately? And are they doing it in a timely manner? Okay. It gives local government confidence in accounts for tax purposes. So local governments don't feel that they need to go in and do their own audit of the business because this is being done anyway by recognised auditors. And they should be ensuring that the accounts meet all the legal requirements and follow international accounting standards. And they should comment on this. Something that's relatively new, it's only crept in the last 2 years, so since about 2018. And I've put you a link for those of you who I teach to the Financial Reporting Council guidelines. They need to make a comment now about whether the accounts are unmodified. And if it's an unmodified set of accounts, then they are saying that these accounts do give a true and fair view and comply with all the material or the significant aspects of the financial reporting framework. A modified set of accounts, well, that would be quite serious for a limited company to get a modified set of accounts, because what the accountants are effectively saying is that there are either significant errors in the accounts or in complying or completing the audit where they've gone through and checked where the numbers have come from, they haven't been confident that all the information the company should be collecting has been either collected accurately or, as important, used properly by the company. So that would be quite serious. And the few times that I've been aware where there have been serious comments of this nature in a set of accounts, share prices have tumbled significantly. And there can also be a qualified opinion, and that's where there might be evidence of some errors in the accounts, but they're either but it's not something that's inherent within the whole of the company. It might be that there's been, for example, a fault in the way that the accounts are being kept that's been found, and these have now been corrected. It happened with Tesco's a couple of years ago, but they're not pervasive. It's not something that's constantly ongoing. It's happened, there's been an error, but this is being sorted out. Or they found some maybe flaws in the accounting process, and they haven't been able to sufficiently convince themselves that these errors have been fully corrected, but they're not something that they believe is inherent within the company. Okay, big criticism of audit. First of all, are auditors really independent? This has been an ongoing discussion. It was highlighted during Enron with Arthur Anderson. And although auditors are approved by the shareholders, they are recommended by the directors. And there's been a lot of criticism in the past that the personal relationships between the auditors and the directors have been too close. And what this has meant is that potentially auditors, for example, may sign off accounts when they are aware of errors because they are promised future streams of work, for example, doing management consultancy. It's also hard for the auditors to check because they don't go and check every single transaction that's occurred within the company. They will check all large transactions, but then they just do a relatively small sample of general transactions that occur within a company. So, for example, if there were some errors in a petty cash book for a part of the company operating in a regional office, these almost certainly wouldn't be detected by an auditor because they wouldn't check many of the petty cash books for the different depots, and so the likelihood on them alighting or finding the right ones that have got all the errors in are quite unlikely. And therefore, it's not a 100% guarantee of accuracy. Okay, it's just a sample that's being made, and if the errors haven't fallen within the transactions that have been looked at in more detail, they just won't be found out. Okay, I've put on here a link to a very, very current auditor's report. It's the 2018-19 audit report for Premier Foods. But things that we'd expect to see in a right up-to-date auditor's report within the accounts are an overall opinion. So have the accounts been modified, qualified, or are they unmodified? And as an investor or as a manager, you'd hope to see them unmodified. Comment on whether the accounts are true and fair. And again, what you'd be hoping for as an investor is that the auditors would conclude that they are true and fair. Comment on compliance with legal and international accounting standard requirements. Clear clarification of the directors and auditors' responsibilities. Comment on the director's strategic report. So does a strategic report about what the company think will happen in the future tie in with the information here and now that the auditors have seen on this company? Comment on corporate risk and corporate governance. So we've already covered that very briefly, and also a comment on how the audit was conducted. Okay, for those of you that I teach, I've shared with you a few of the key sections from Premier Foods Auditors Report, and I've also set you a homework question, which I'm sure you're going to enjoy very, very much. Thank you for listening.